Hello and welcome to this very special episode of Sashakt Niveshak, brought to you by National Stock Exchange. Joining me today is a very close friend, somebody who I have admired and known for a very long time. But more than that, he is someone who perhaps every investor in this country looks up to as being someone who has spent 2.5 decades and more in trying to build wealth for Indian citizens. S Naren, who's the Executive Director and CIO at ICICI Prudential Mutual Fund, needs no introduction. Uh, Naren, I know that normally when you go for an interview, uh, everyone wants to know what you're thinking about the markets. But as you know, with me, it's always different. And we are going to talk about best practices for long-term investing. And I know that uh, it's something different. Many people don't ask you that, but I must say, Naren, that uh, whenever I have asked you over these years to come and talk about investor education, you come always. So thank you very much for taking time out. I know that this is not one of those action-packed interviews where you're going to be asked which sector is Naren looking at. But thank you so much for all that you've done. Lakhs of crores of investor wealth you and your team manage. Uh, my first question, Naren, is that as somebody who's been managing money for so many years, and when you look at numbers now that it's been 20, 25, 30 years of some AMCs in existence, and we see how a lot of schemes, a number of schemes, some of which are yours, uh, have compounded wealth at over 20, 22% over a period of 30 years. And yet, a lot of people of our generation missed out. I'm sure when you look at your own data, how many actually stayed for 30 years would be a very small number. So let me ask you this. Do you feel, and why do you feel that we missed out on this huge opportunity that came to us? And I'll ask you about the next generation, but first for this.
Thanks for the introduction. And I think I don't know actually because I got into equity markets in late 80s actually in Chennai, and I always felt that equities was a great asset class. And in 2004, when ICICI Mutual Fund gave me the opportunity to enter as a fund manager, I felt mutual fund was a much better vehicle for long-term investors. So I was so happy ICICI gave me that opportunity. It has also kind of baffled me why investors have not stuck on for long actually in investing. I don't have an answer actually why that is the case, but if you ask me slowly over the years, if if I think in 2004, 2009, 2014, 19 and 24, I think in 2024 people are much more willing to think long term. In 2004, if the same question was asked, people were not willing to think long term. Today, people are willing to think long term. And that is the reality. Every 5 years, the number of people who are willing to think long term has increased significantly. And but the question I asked is it because of the last 10 years of returns? Is it because of the fact that the last 10 years did not see enough market volatility? Because in 2004, when I entered ICICI Mutual Fund, the 10 years from 94 to 2004 was not easy. And people were not willing at that point of time. Whereas today, people are willing because 2014 to 24 was a period, thanks to good macroeconomic management, thanks to the way the markets have been less volatile. So I ask, is it because of that? Or is it genuinely people have started to think long term? I don't have an answer there.
Yeah.
But you're right that people have not been long term investors always. But if you look at the number of people I meet who say that I have invested in equities for the last 20 years, the numbers are steadily rising. And that part is very clear. And today, if you ask me, it's easier to get people in my team in equity mutual funds than to get people in debt mutual funds. So if I have a vacancy in debt mutual funds, I struggle. I tell debt is also a good asset class, but I struggle. I tell them debt is going to be a good asset class for the next 10 years. People will say, no, no, no. If you have a vacancy in equity, I'll join you.
You were probably studying engineering
Yes.
in your 80s when
Yes.
you said you started. So when you started dabbling
Yes.
in stocks, were you trying to trade? Because I'm asking this with a reason, this question. Or were you even at that stage looking at trying to analyze a company and invest with a, I won't say long term, you were too young at that time, but probably a medium term kind of an outlook.
I tell people we were all very lucky because, see, frankly, we understood financial statements. And it was a time when before NSE was set up.
I know.
And it was the time before SEBI was set up.
Correct.
The entire market regulation has improved so drastically. The entire trading, clearing, settlement, and regulation of SEBI has improved so drastically. So you had to be an investor. If you look at it at that point of time, we would invest in a stock, then send it for transfer, the share certificate. By the time the share certificate came back, it would be 6 months sometimes. So could you have been a trader? You couldn't have been a trader in those days. See, today you can be a trader. In those days, it was impossible to be a trader, if you ask me. So I don't think that is true. But the understanding, you know, in those days, we could read an annual report, and that was a benefit. Today, the annual report is available online, and there are so many people who can understand annual reports even better than me today. So the situation is that at that point of time, we had what we call an information age by understanding annual reports. Today, that is not there.
Mm. So one thing is very clear that Naren, today people, most people, young people know what is a mutual fund. I think that effort which has been done over the last 20, 25 years, accelerated with the mutual fund Sahiya campaign, I think has at least taken away that part. If you recall, we used to go for investor camps together and we had to tell people what is a mutual fund.
Exactly.
Uh, However, even today, I find a lot of young people feel that SIP is different, mutual fund is different. Which mutual fund should I buy? Should I buy an ETF? Should I buy X category? And I think SEBI has done a great job of, streamlining those categories again. But for a young person who's listening to you right now, what according to you is the way to start for a beginner in a mutual fund? Because a lot of planners I hear on their commentary or when I speak to them, they say, just put your money in a nifty index fund, a passive fund, and start there. And there are many who say start with a balanced fund. There are many who says go to a multi-cap to start with. So there is a certain amount of confusion still there for a new person, for a new young person. What would be your advice?
Yeah. In my third year in ICICI, we went through 2007, 8, 9. 2007 was my fourth year. So in the fourth year, when I went through 2007, 8, 9, we automatically realized that if you invest only in equity, you have to be prepared for the ups and downs. Yes, last 10 years have not seen downs. So after that, we came to this whole concept that you have to focus on asset allocation. And what we realized was concepts like balanced advantage, where markets go up, you sell, markets go down, you buy, are much better because the investor experience between 2007 and 9 was not good. People invested in equity in 2007 and people did not invest in 2008. And therefore, what we realized was you have to, at least for till the first fall in a investor's existence, people have to invest defensively. After they have seen one fall, they can do what they want. For example, you can invest the way you want because you've seen ups and downs in the market. But there are so many investors who have come after 2020 COVID who have not seen a fall. So if you're going to recommend the most aggressive asset class at this point of time, when the first fall happens, they say equity that can give negative returns. They don't recognize that because they've seen only upturns. So I believe that till the first fall that they are seen in the equity market, you have to get them to invest more defensively. Once a
How
person
would you define defensive?
defensively is you have to go into hybrid funds. You can even do systematic investment plan in hybrid funds. Those are the models that I would recommend till the first fall. Once they've seen one cycle, after that I leave it to them what they want to do because they know what are the risks of the market. If they know the risks of the market, I'm very comfortable. But a lot of people don't know the risks of the market. That's what we at ICICI see. Because there are people who have seen 2011 where the market fell 25%. There are people who have seen 2008 where the market fell 50%. Then there's no problem. But there are so many people in the market, when we tell them markets can fall, they say they can. That is the challenge at this point of time. That is the whole problem that we are facing at this point of time. Thanks to very good macroeconomic management, we have not seen any falls in the market. And that is a big worry that we have at this point of time. And even in 2020, market fell for 1 month and recovered the next month. So people think even if the market falls, it will fall for 1 month, recover the next month. That's not the way the markets have been in previous cycles.
Mm. Tell me something. It's interesting you made this point because a lot of data and even SEBI came out with a very exhaustive report which talked about how uh, X lakh number of people came into the market post-COVID or during those years, and many came in doing trading, and how most of them actually suffered a loss. Uh, what would your advice be to young people on what it takes? Because I think when you're young and you see so much more information today, you talked of the 80s where there was paper, there was no internet at that time. There was no, multi television channels at that. There was no, influencers screaming at your face and saying, buy this stock or buy that stock, right? So things were, the noise was also much less. But today, amid all this noise that a young person consumes, uh, many feel that, oh, I can also research and invest on my own. Uh, as one of India's top fund managers who has consistently delivered, what does it take to invest even in one company? I mean, what's the things you look out for as Naren?
So I think to be a good investor, you need good temperament. People believe you need very good knowledge. I think you need good temperament. Do you have the ability to invest in 2020 in equity? Do you have the ability to invest in equity in 2008? Do you have the ability to sell in 2007? Do you have the ability to be not so positive today at all-time high? So in I've been in ICICI Mutual Fund for 20 years and I've been a stockbroker for 10 years. So thanks to my experience in ICICI Mutual Fund, I think the key is temperament. People think the key is knowledge. The key is not knowledge. The key is temperament. And if you have the right temperament over a long period of time, you can make money in many asset classes. It was very clear if you look at Delhi real estate market from 2003 to 2013 for 10 full years, the real estate market has just gone ballistic. Did it require knowledge to know that for 10 years the real estate market had gone ballistic? The answer is everyone knew that you have to be cautious in 2013. So I believe that temperament is the number one skill set required. And if you don't have that temperament, it is much better to come through mutual funds. Yeah. Unfortunately, what happens, all the investors who come in after 2021 in the 2000 COVID in direct equity, we don't know their temperament. Some of them may be good, some of them may be bad. We don't know their temperament. The people who have good temperament, they may end up making money. People with very good temperament don't need mutual funds also. But there may be a lot of people with bad temperament who are doing direct equity. It took me quite some time. We were all people in direct equity in late 80s and 90s. So it took me some time. It was only in the Asian financial crisis that we learned that temperament is sometimes more important than all the knowledge that we have. So that at the peak of the Asian financial crisis, if you had bought equity, you made money. Then in the peak of the dot-com problem, if you bought equity, you made money. So it is very easy that if you have seen huge losses and everyone else around you have made huge losses, you should be more positive. So that was something that was a learning which came after some time that temperament is important.
So, what is good temperament? I've seen you have the same Zen look on your face for the last 25 years I've known you. Is it about being calm? Is it about being a patient person? What is good temperament?
Good temperament is the ability to buy when everyone else is panicking and the ability to recommend asset allocation at all-time high. So most people are kind of upset with me that instead of recommending equities at 74,000, 75,000 in every interview, I keep talking on asset allocation and not recommend equities alone. Because today I know that equities is not the cheapest asset class at this point of time. So we recommend asset allocation. Last year, for example, gold had not done that well after 2012. So we started recommending multi-asset as a category. But today, gold has also gone through a roof. So today, what happens is temperament is the ability to buy a asset class which has done very badly
Hmm.
and sell an asset class which has done very well. That's the simple thing.
Hmm.
I would not go to the level of stocks because when you go to the level of stocks, you have to do much more analysis.
Do you believe that, you know, let's take a 21, 22-year-old girl or young man today and say, next 25 years, I'm not asking you 3 years, 4 years, 5 years, asking you 25 years. So our generation missed the bus. But where India is poised at this point of time, and if you were to crystal gaze and say, given all the factors, given where we are in our economic journey, given our demographics, given our young population, given the changes that are happening, of course, there can always be accidents along the way. It's not going to be one single curve. But do you believe that the next 20, 25 years will be a great India story?
I would say our generation didn't miss the bus, first of all. I think our generation and the generation in US are the two countries where people didn't miss the bus.
I
First
meant
of all,
that people of our generation didn't really make money through equity.
look at the number of people who chose equity as a career and didn't miss the bus, the investors who stayed on. I agree
Who
more.
stayed on? That's what I'm
I
saying.
would say a number of people chose equity as a career and a lot of people did invest. So if you see, India and US are the two markets which have done very well in the last 20 to 25 years. So my view is that the last 25 years is about India and US. And the next 25 years, maybe. Sometimes what happens is crystal gazing. If you were asked me 25 years back, will India and US be the best markets in the world? I wouldn't have told you. I would have told you only US. So when I talk to many of my engineering classmates, I think India has been a phenomenal story.
Of course it has.
I could not have believed that South India will transform into such a bastion of where people could get educated, people could get jobs at the time I passed out of engineering. And today, every Fortune 500 company has a base in South India supporting their operations in the world. So I would say the last 25 years has been about India. And maybe the next 25 years is maybe also about India. But sometimes what happens is what we judge about the future doesn't appear to be true. Like 10 years back, if you had asked, would the mutual fund industry grow at this pace? I would have possibly told you it grows slower.
That's fine. Yeah. That's
Actually, but at the same time, I believe that what is the challenge, if you ask me, is you should not get caught in bubbles. When you make too much money, you have to turn cautious. At the same time, if any asset class does too badly, You have to ask yourself, should you invest? I believe that is more important than taking a call whether how the next 25 years will be. And that's why asset allocation works. Because what is asset allocation? You identify an asset class which has done very badly. Suppose in 2020, 7-year return real estate in most parts of India was zero. So real estate should have been considered. Real estate has done very well from 2020 onwards. So I believe choose an asset class which has done very badly. That is asset allocation. And I believe on that basis, next 25 years, India will be a great story. That's how we look at it.
I was when I said miss the bus, I meant not too many from our generation stayed invested for 25 years.
That may be true.
That is what I meant.
But you know, when I think
That
back,
people like common people, like you or me, when we came out of it, we could have put small amounts and today be sitting on crores of rupees because of power of compounding. That is what I meant.
but you know, when I think about the scale at which our company, when I joined the company, we had 10,000 crores of AUM in ICICI Mutual Fund. Today we have some 7 lakhs, some crores.
Yes.
That kind of growth, itself shows that people have invested.
Yeah.
Otherwise, this 70, more than 70-fold growth in 20 years,
That,
which I
that's
did not
also,
guess.
as you rightly said earlier, been a more recent phenomenon.
Correct,
Last
but-
5, 7, 8, 10 years.
Correct, but it has been continuous.
Yeah.
Could it have been higher? Yes, it could have been higher. But the reality is, at least we have seen this growth. And in the last 10 years, it's been continuous growth on a continuing basis. I mean, when we used to think 10 years back, will we have this kind of growth? I would have said no, but we have seen this growth. Could it have been bigger? Yes, it could have been bigger. And if you're asking me, I think most of the problems happened in this 94 to 2004 phase. And after 2004, things have been much better. If you look at it in 92 to 94 phase, some of the asset management companies and mutual fund launched and collected huge money. They couldn't deliver returns to the investors. But in the phase after 2004, the growth has been pretty good. If you look at it, it is the first 10 years which was the problem. And that is the challenge, if you ask me. That's where I think awareness programs like what you're doing today hopefully will ensure that people stay on. Otherwise, if you look at it all the way from 97 to 2004, in that phase, there was zero inflow into the markets for that 7-year phase. People just took out money. Whereas now we've had almost 10 years of continuous inflow into the markets. So that's what we have to try to do. And that time there was no SIP sahi hai, SIP nahi tha.
Yeah, there was no SIP. One final question. What is your favorite power of compounding story?
It is patience. I think the key is patience. I think the biggest thing is that people have to trust and be patient. And the challenge is that sometimes what happens when they buy a house, they say no, we have bought it for the long term. When they bought a mutual fund, what happens? The ease with which we have allowed redemption sometimes allows people to take out the money. It's good that we have allowed it. But the fact is that sometimes, people are able to take out the money. Whereas you think of the friction involved in selling a house today in India. It is just unimaginable that every decision to buy a house becomes a long-term decision. And it is very good that the regulator has created very good systems that you can get the money. If I take a decision today, I can get the money very quickly. But what happens sometimes the longer term decisions people take out quickly because of the ease of redemption, which is fantastic. But the request to all the investors is just because you can get your money fast doesn't mean you make a long-term decision, a short-term decision. That is a request I tell investors. Don't do it because you have invested in a product which will actually deliver over a 20-year period. So do not make it a short-term decision. Then you'll get the power of compounding. And panics are to be used to invest and not to disinvest. It didn't happen. To be honest with you, in the last 10 years, we've been very happy with the way mutual fund investors have behaved. So I don't think I have anything to crib about, but I would say I'm always worried about it. I don't think the investors have taken out at the bottom. In 2020 also they invested. in 2000 and most of the periods where we have seen downturns, people have invested. Even when the Ukraine war happened, they invested. So I would say that there's no room for complaint. I think they should continue with that framework.
Always a pleasure talking to you, Naren. Thank you very much
Thank you.
for coming by
Thank you.
and speaking to me.
Thank you.
Thank you.